Today's November 1st, 2025. I'm going to do a rundown of Nasdaq's price action from the past week, um, the levels that it reacted off of, the levels I mark out to see price react off of, and how price does react off of them, and how you can potentially take entries based off of the areas that I marked out. So, coming to the week, we have this massive opening range gap from Friday, October 24th to Sunday, October 26th. So you would mark that out with a rectangle because we only really care about if price is going into it and if it's going to hit its coin approachment. Um, let's go ahead and mark this out with a yellow just so it doesn't get mixed up. Okay, so that's Sunday. So Sunday coming into Monday. Let's go on the daily because we want to see if we're in a daily wick or if we're in a daily price range. There we go. So going into the day, we're not in any daily price range. There's not much we can look up other than all-time highs right here. So Friday going into Monday, we have an opening range gap and we're into all-time highs. So there's not much we can look off of other than we're bullish, right? So, and we can obviously base it off of new week opening gap, and we also have a new day opening gap, opening range gap. Let's go down to the 5 minute, I think. So market opens 9:30 right here. Comes up, sweeps out buy side. All three of these highs. Really smooth, really quick, easy. And literally immediately right after that, comes down, sweeps out this sell side, and taps into this fair value gap, respecting it and respecting bullish order flow. Because that's what we're in. And we're also at all-time highs, so you should be bullish. Price comes down into opening range gap, I'm pretty sure. Yep. So there's opening range gap, and then this is the new week opening gap. So an opening range gap, I say, would be from here to here. So price actually does come down into opening range gap, taps it a little bit, and then taps it, moves away from it, closes above it. It comes back down, taps into it, doesn't close back into it, and then we start rallying higher. And then we go back to electronic trading hours. And so these candles, you're gonna see these red boxes everywhere. There's 5 of them because for every day I mark out the first presented fair value gap or what I expect to be first presented fair value gap because sometimes it depends on which fair value gap you use depending on price action. So let me show you this one. Normally 9:30 is not. It's normally the candle after 9:30, but since 9:30 candle comes up, sweeps out buy side, and creates a fair value gap, then you would say that it is first presented fair value gap because of the fact that the fair value gap was used to sweep out liquidity. Um, you could also say this one as well because it's just as important. You can see how price reacts off of it right there. And these candles. So price gets below it, it comes back up to CISD here after sweeping out liquidity. And then right here, price gets above, comes back down. It's the first presented fair value gap. Possible entry. Stop loss would be below this low, or honestly below this low right here. I think this right here was SMT as well. So ES didn't take out this high, or this low down here, and then take profit above these highs, or you could do standard deviation of this price range. So you could target number 1 up here, or if you're feeling risky or ballsy or you know what price is going to do, You could do -2 or -2.5. As you can see, it hit every single one. I bet it also hits -4 as well. Eventually we get up there, but that's besides the point. That's why I don't use -4 because it's very low probability if it gets there. So yeah, price gets above CASD, so basically the manipulation leg, and then we come back down, tap into first presented per value gap, and start rallying higher. Then we come back down, retest this area, basically take out like intermediate sell side, then go higher, and then price just runs up into the highs, -1, -2.5, -2, and that's basically it for Monday AM New York session. Let's go to Tuesday now. So, like I said, let's go to the daily. Coming to Tuesday, we have this premium high right here, wick high. So you're gonna mark that out, put the quadrant levels on it. Coming in the morning, on Tuesday. There we go. Perfect. And then I like to go on the 5 minute after marking out the daily wick. So as you can see, price opens 9:30 right here, rips higher. Then we use this rejection block right here, stay below it, come back down, create, and we take out sell side over here, intermediate sell side, create this low right here. Price comes back up, wants to sweep it again, comes down, sweeps it, reacting off of these daily wick quadrant levels. You can see 0.5, 0.75, 0.25, comes down, runs all of that, and then from there, price continues higher, running into this high up here, the high create previous all-time highs, and then continuing higher. And this right here, you could sorry for the sirens in the background. My window's open. So basically, price comes down here, goes to -1 and -2, and also -2.5. We'll go to 1 minute. It'll look a lot cleaner. This is the liquidity sweep, and then that's the price comes back up, and then that's the sell. That's the sell model for the day. All of this, um, and then price ends up coming back down here, sweeping this low, reacting off of the daily quadrant levels. As you can see, 0.75, 0.5, 0.25 comes down, sweeps all these lows, and then continues higher. 1 second. I'll let you out. I'll let you out. Jesus Christ, I hear you. Go ahead. Little rat. Okay. Okay, that's where I was at. Okay, so we sweep these lows. Sweep these lows down here, then price continues higher. Um, price action was pretty ugly on Tuesday. It was pretty choppy, as you can see. Um, it's hard to see, but like if you zone out on a bigger time frame, obviously in hindsight, but it looks a lot more simple. You go on the 15 minute, price wanted to come down, take this 15 minute, and then we racked off that shit, go higher. Okay, so that was Tuesday. And then we just rally higher, so we don't even need this quadrant level anymore. Get rid of this rejection block, but you can see this rejection block I respect it again here. Let's come into Wednesday. Go back to the daily. Wednesday. So Wednesday we got this premium wick right here. Again, measure out the quadrant levels. Go to 5 minute. This is not right. Wednesday. So Wednesday's morning. Yeah, right there. Perfect. Perfect. Okay. So coming to Wednesday. 9:30 is right here. 9:30 is this candle right here. Price comes up, sweeps this high, this internal high, comes back down, sweeps these lows, racks off this fair value gap. We're still in bullish price action, as you can see. Price also sweeps out, takes out these relative equal lows, continues higher, comes back down, takes out these lows. Then we start ripping higher, take out all buy side and our all-time highs. So after we do that move up higher, sweep these highs, and we start getting rejection lower, we should be looking for a sell model. So price gets up here, takes out all these highs. You go down to the 1 minute, and since Wednesday, and we want to see these daily quadrant levels, we should also be targeting this. Also, opening range gap is below us, and midnight open is below us. So most likely going to be looking for shorts today. Price comes up, comes back down. We have a CSD down here. Now we're looking for shorts all throughout this price leg. You can enter here in this fair value gap. You can enter here in this fair value gap. You can enter in this inverse, which is also first presented, which would be the best entry. So the inverse fair value gap before the manipulation leg is normally the one that likes to be reused. It was used here and then it was used again. Entry there, stop loss above this, the inverse high, or you could do this protected high up here, the manipulation leg high, because that one is also protected. And then price starts ripping lower, taking out all sell side, and all sell side. Basically all levels of sell side. I think it also went into an hourly fair value gap, if I'm correct. If I remember correctly. Wednesday. It's Thursday. Wednesday, yeah. Wednesday comes down. And yeah, it goes in. I was looking for this hourly fair value gap to be filled. Hourly fair value gaps get filled, and first presented fair value gap from, I think it's Tuesday. Gee, crazy. Yeah. So Tuesday. So price literally. This is PM, so I'm not trading this. But price. I think this is. Oh, this is FOMC. So what price does? Sweeps all these highs. All of this buy side starts chopping around for a bit. Comes up into this rejection block. Reacts off consequent encroachment and then dumps, taking out all sell side and entering Tuesday's first presented fair value gap. Pretty random, huh? That first presented fair value gaps have been used every single day so far. Anyways, must be random. Then price comes back up and takes out all buy side because we are still bullish, still all-time highs, bull run. Nasdaq's just very volatile. I think the next week we're going to be dumping because we haven't filled the opening range gap that I was talking about, or the new week opening gap that I've been talking about. ES has tapped it, but Nasdaq is not. Let me see. Let's go to Thursday's price action now. Like again, you can see here, this is the same premium wick from Tuesday. Price comes down, reacting off of 0.25 level, just coming down lower, and then surprisingly enough, Thursday's price action actually does end up going back into this premium wick and then coming back lower off of it. But let's see if that's even what it's in or what I should be worrying about. Normally I just like to worry about the previous day's price action in the leg that we've been in. So Wednesday to Thursday, I'd like to mark out this. And we also went higher, so I'd also like to mark out this. I know it's going to look crazy, but just honestly, I don't even need the upper one, so that's perfect. So just the lower discount wick. is what we used on Nasdaq. This is Friday. Oops. Maybe I do need that wick. Nah, we're good. We only need this one. Okay, cool. We only need the discount wick because we're bearish on the day, so that's good. Um, Let me give you the reasoning. I'm bearish on this day as well. It's because on Wednesday we had the FOMC, which basically took us lower, but we didn't stay lower for too long. So I expected us to be bearish again coming into the day because this looks like a rejection block. We used it here and continue lower. We also have these volume imbalances too that we were respecting. Let me just get back into it. So coming into Thursday's price action, Thursday's open, which is right here. That huge move to the downside. So price immediately opens and comes down, takes out sell side down here. But it wasn't an efficient sell. It was not an efficient sweep. Let me show you what I mean. Take out buy side or sell side just by a little tick. So what I like to see when that happens, that is basically price generating more sell side so that it can come back up and then later take it out again. So it's exactly what it did. It takes out sell side technically, but it's honestly just the generation of sell side. Price comes back up, sweeps out these highs, tops off. Look how perfect that is. The top of the discount wick, 0.75 discount wick, comes down, comes back up into consequent encroachment, stays below it, comes back down, rolls over, taps what? Thursday's first presented for a value gap, comes back higher because it has to go higher. It's just respecting it for a little bit, but it doesn't respect it completely because we continue lower. Comes back up, 0.25, and then we start to chop, but same area, 0.25, 0.25, 0.25. Eventually, price straightens itself back up, takes out buy side, internal buy side, comes down lower, closes below, first presented for value gap, re-enters, and then you can um, short there to obviously these lows, and then there's all this sell side right here, so you could this low, this low. Honestly, I would do these lows because they look like relatively good lows. They want to be taken out, so that's where my take profit would have been at. But basically, price comes down, takes out all sell side, and then we just took out all sell side, so we should expect this to go higher. A price comes up here, CASD gets above these highs. We have a price leg that comes back into this fair value gap at 430, and then price rips higher, cleaning this wick, going all through that shit. And that was Thursday. Now let's move on to Friday. Last and final week. Let's go back to the daily. Friday, we're going to be using this one right here, this wick right there, and then this wick above. I don't know if we use both. Let's see real quick. We don't really use it much, but I'm going to show it just for purpose. So yeah, this is the bottom of that premium wick. So we don't really use it much off open. We respect it here. Go to 0.25, rack 0.25, 0.25. Price comes up, sweeps out these relative equal highs at 820. Then price starts to roll over. And the market opens after taking out all buy side. Here, CASD, we have a retracement into looks like this inverse. I bet there's probably a 15-minute inverse that it reacts off of right here, and then price starts to roll over again. The market doesn't open till 9:30, so I'm not even looking for anything. As soon as market opens, we already have that retracement back, so 9:30 should be distribution, which is exactly what it is. Takes out all sell side, or immediate sell side, I guess you could say, and then comes back up higher, taps back into that discount wick or the premium wick. Let's delete that now. We don't need it. Price gets above here, comes into 930 for a value gap here on the 5-minute, reacts off that as a retracement because market maker sub model is move up higher or intermediate high right here, comes higher, comes down, gets below that intermediate high from the manipulation leg. Then price, if we want to see it rebalance up to at least 0.5 of this price range, which is where we're at, basically a little bit above. Reacts off that 5-minute for value gap, gets lower. CSD here, we get a retracement back to where? What is this right here? First presented for value gap. Let's go to 1 minute. Let's get a better look. Price comes up here, takes out these relative equal highs, reacts off this 5-minute, gets lower, comes down, breaks below here. That's when we're looking for the re-entry. Price comes back up. Friday's first presented for value gap, and then as you can see, you can put your stop loss above this high here or above this high here, and then price starts to roll over, taking out all sell side. Tuesday's first presented for value gap, Thursday's first presented for value gap. Tuesday get below right here, taps back into it. Might give you a better view. Tuesdays we get below here, come back up, tap into it, goes lower. Same thing here, closes below it, taps back up into the consequent encroachment of Thursday's first presented for value gap, goes lower. It's just used a lot. First presented for value gap's used a lot, and you can't even dismiss that. But also, if you can see the daily wicks that I've been talking about, let's go back to 5-minute. I like it better on the 5-minute. It just makes more sense, more clear. So this is the daily. These lines are the daily quadrant levels. So the wick I marked out. Price comes up, taps the top of it, gets below it. Then we just start rallying lower. Then we come back up into a consequent encroachment, go lower, tap 0.75. We start reacting off of a 0.75 level. Start moving higher. Get a CSD here, above this high, so right here, and then that's basically it, man. That's really it. The only thing I would say that like I can't show, or I could show, but I just didn't. I chose not to. Is like SMTs, but with SMTs R is just having Nasdaq's price action up next to ES's price action, which is what this is right here. This is ES and this is Nasdaq. They're correlating assets. If one sweeps the high and the other one doesn't, then it's called SMT. Then we should expect price to move in the opposite direction. And the one that doesn't sweep price action, the one that doesn't sweep the manipulation leg or whatever, I don't know if y'all even said. Anyways, the one that doesn't sweep the leg or the liquidity is going to be more bearish or more likely to move in that area that you think is going to move into the opposite direction. That was my analysis of Nasdaq from the past week. That's really it. I don't really have much else to say other than I've been realizing. I guess I can go over like what I've been realizing. So I've been more risky. I've been taking trades a lot more faster, and I'm not being nitpicking, and I'm noticing that I'm not nitpicking anymore. And I should be nitpicking because I only really need to be taking one good trade a day. Which sometimes there are multiple good trades. I just need to realize when it happens because sometimes, like right here, we sweep these highs. We sweep these highs right here. Sometimes you just need to wait because we swept these highs, right? But it wasn't a good enough sweep. So then we go ahead and sweep these highs again. Then we dump back off. So sometimes it's just a little more difficult to understand or realize when price is gonna reverse, and it's hard to always like top ticket or like get your best entry. And then also sometimes when you're trying to get that good entry, you don't set your stop loss high enough, so it just doesn't. You might get stopped out. So that's one thing I'm also realizing that like my stop loss needs to be in the position where it won't be stopped out if my trade is and my analysis is correct. So just little things here and there. all I want to do is just pass this funded account, just trading strictly logically and by the rules, by my rules. I just want to trade my model, trading with narrative and market structure. Because market structure is the most important thing, in my opinion, that I've realized recently. And market structure is basically saying that if we have a move higher here, we took out buy side, we have a reason to go lower. So we have this intermediate high here. Or no, we have this intermediate high, I guess you could say here. And then price goes up, again, taking it out. And then price takes all of this out. What do we expect? Because we just had a bearish move lower. And we just took out all these lows. What should we expect? We should expect a retracement back into this price leg. But we should never expect it to go above this high before we go down to take out this low. It's honestly simple. I just have to start realizing what price is doing before it happens. Like you can even say right here, market structure shifted because it got above this manipulation leg down. And guess what happened? It continued higher because we had a reason to continue higher because we only retraced so high. Then we take out this high, and then this model, the bigger, higher time frame model, ends up playing out, and we end up going lower and absolutely capitulating. But there was a smaller time market structure shift inside of a bigger time market structure shift, which is insane. And it only makes sense if you understand and if you've had enough repetition. Like, it's all about reps. The more you see it, the more you're gonna see it, you know? Like, it's honestly just that simple. You just have to have hours in the game and just eventually you'll just be able to read this shit like a book. Literally like like a fictional book. This is real life though. This shit is so simple. The more simple you make it, the more simplistic it is. Like I just explained price analysis, but like when I'm actually in the charts and trading, sometimes I tend to make it more difficult than it really is. But I'm ended off there today. Um, thank y'all for listening. I hope you found this insightful. Um, enjoy your weekend. I'll see y'all on Monday. Until then, peace.